Okay, so we're going to start our second day on reviewing inventory, and we're going to work out a couple of problems in class, but a few things I want to review and make sure we go through. And I covered last time LIFO, FIFO. I'm going to get into a little more detail on average cost and specific ID, specific identification. So I'm going to go ahead and go into our whiteboard, and we're going to take a look at, you recall we bought some milk this time. And let's say we bought 10 gallons of milk, this time at $1 a piece. And then we bought 20 gallons of milk. This is better milk. I mean, these are all the same kind of milk, but it's not the store brand. But the price went way up, and we're paying 2 gallons, $2 a piece. So the question to you is, what's our total available goods available for sale? Well, we know we have 30 units, 30 gallons, and the total cost, we can go back and calculate that out, don't we? So we get $10, number's easy, 2 times 20 is $40. So we get a total, if I can type properly, we have a total cost of $50. Okay, nothing fancy. So let's say I sell a gallon of milk for $3. And we reviewed last class. The answer to is, what's my gross profit? It depends. So there's 2 options here. I can either take 3 minus 1 and come out with $2 in gross profit, or I can do 3 minus 2 and come up with $1 in gross profit. Now, which of these is FIFO? Which of these? So if we're selling the $1 gallon of milk, and this is the $1 gallon of milk up here, this was the stuff that was first in. So this would be $2 of profit on a FIFO basis. And this happens to be our last in. So nothing fancy. This is on a LIFO basis. Okay. So again, this is probably most of your second exposures. We talked about last class, maybe third. You saw it, some of it in the homework. You'll see it a 4th and a 5th time. So it'll be reinforcing. You'll probably see it in a quiz either Friday or Monday. And yes, well, you'll know your LIFO and you'll know your FIFO and you'll know your average cost. But let's talk about average cost right now. What is my gross profit using? So you know it's going to start with $3 in sales. But my question to you is, what's my cost of goods sold if I sold 1 gallon? Some of you might say, oh, I get that. I can do this in my head. I got $1, I got $2, I take an average, that's $1.50, and I'm on my way. Isn't that cool? That would not do it. This is called a weighted average cost. And I need to specify that and make sure you're aware, because if you say $1.50 a gallon and I sold 30 gallons at $1.50 a piece, that would not come out to $50 in cost. As a matter of fact, 30 gallons at $1.50 will come out to $45. Validate on the calculator if you want. But $45 is not what I paid for my inventory. I paid $50 for this inventory. So I have to backtrack and say, wait a minute, on a weighted average, how do I calculate that? So I'm going to do a weighted average calculation here. The same way you calculate miles per gallon, you put miles over gallons, right? The same way you calculate earnings per share, you have net income or earnings or net profit over number of shares. I want dollars per gallon. So to calculate dollars per gallon, I'm going to put the dollars in the numerator, my $50, and I'm going to put the number of total gallons I bought in the denominator. And if I calculate that out, I drop the zeros on the end, so I drive 3 into 5. 3 into 5 is going to give me 1.6666 repeating, or 1.67 average cost. Now, you know the average cost has to be between $2 and $1. And by the way, if you said, oh, I do this in my head, I got $1.50, you realize that I've got 20 gallons of the costly or the $2 milk and only 10 gallons of the less costly milk. So if I'm looking at that, I'm going to say it's going to be closer to $2 than it is to $1. And this is the case. I'm at $1.67 per gallon, which is closer to $2 a gallon than it is to $1 a gallon, because I have a more heavily weighted 20 gallons at the higher price and only 10 gallons at the lower price.
So it's
Kind of like a GPA, exactly. Number of credits times a grade, exactly right. Total them up, divide out, and you're on your way. Perfect example. Thank you for the input. Yep, your GPA, you can do. Hey, you know how to do GPA. You know how to do average cost of inventory. Well done. Congratulations. All right, so we're going to deduct 1.67 from our cost of goods sold, and we'll come up with $1.33 rounding. And we'll have that rounding error sometimes, but we don't worry about that. So right now you can see we're doing weighted average. We calculated a cost of goods sold for each unit sold. And by the way, if I multiply this 1.6666 repeating or 1.67 times my 30 units, I'm going to come up to $50 plus or minus a couple of pennies because I have that rounding thing going on. So that is the accurate way to calculate an average cost. And if we don't do that, we won't be accurate. We won't be displaying things. We won't be understanding things. Okay. Last method I want to talk about is specific identification. Specific ID. Well, I sold that gallon of milk on the shelf. Grab it. Was it my $1 milk or my $2 milk? Well, whatever it is, that's the one I sold. I'll calculate. Then I grabbed that other gallon of milk and sold that, and another gallon. And you track each one of these individuals. It is a pain in the butt. We're not going to do that. We don't track usually which box of cereal, which box of cornflakes did you get? Did I get the $1.28 box or the $1.35 box? No. You got the box of cereal, and we're going to take an average or a LIFO or a FIFO. And by the way, each one of these things is called a cost layer. So I want to make sure you're aware of that term. And that can either be, we talked about buying it January 5th, X1. We talked about buying this maybe January 21st. X1, hopefully in the same year, we'll get milk, so be careful. Or maybe this was our beginning inventory, doesn't matter. Our beginning inventory starts, we add some more stuff to it, we've got goods available for sale. As you recall, we've talked about this inventory thing going on. We've got our beginning inventory plus purchases, yields goods available for sale. And then we deduct our cost of goods sold equals ending inventory. Or we could simplify it as well and say deduct ending inventory, and we end up with a cost of goods sold. So either way, it's either sold or it's still here. We sold it, or it's sitting on the shelf. Those are the two options we have before us. And that's going to total all the stuff that's available to sell. So you say, wait a minute, I see a shortcut here. If I ask for ending inventory, if I calculate the cost of goods sold, I can take it from my goods available for sale and get ending inventory. Or if I've got ending inventory and I've got goods available for sale, I can get my cost of goods sold. Okay, we'll be playing with that later on, but I want you to see the big picture of how this stuff flows and fits together. Any questions so far? Are we on the same page? Making sense? I hope it's making sense. All right. We're going to go into the books in a short while, and I want to take a look at some exercises. Now, we talked about consignment goods. We talked about goods just because it was on the shelf doesn't mean it's ours. Pepsi, they'll put stuff on the shelf and it belongs to Pepsi, even though it's in a grocery store. But when they sell it, Pepsi gets credit, the store takes their cut, and then they owe money for Pepsi. Consignment goods at a clothing store, some used clothing stores. You bring your stuff to them as the consignor, they put it on the racks, and people come and buy it. That's not their inventory. That's still your inventory. Congratulations. It's your clothes. You got to be careful that if they have a fire or something else happens, they're insured and some other things are going on. But overall, the inventory belongs to you. And when they sell it, they'll take their cut, they'll give you the difference, and you're on your way. So be aware that this consignment stuff happens all the time. Some car dealerships use car lots on the corner. You can drop off your car, they'll take care of the handling the title, the test drives, and the paperwork, and transferring and information and dealing. I teach for a living. I can't go mess around and make all the appointments, meet people with a car, and maybe they'll hit me over the head and take my car. I don't know what's going to happen. I give it to somebody. That's a professional. That's what they do. They're insured for it. They take care of it. And I can do all my business and they can do theirs. And they take their 10, 20, 30% and everyone's happy. So sometimes car dealers buy their cars. Sometimes they have them on consignment. Please.
So it's still your inventory up until the sale. So like how do you, I guess, when the company will have that split when your item is sold?
Okay, so consignment goods. The inventory belongs to the consignor. You bring your clothes over to the consignment ship. They put it on the rack. It doesn't sell. They say, here, take the clothes back. That's still your inventory. Okay. Amazon is doing the same thing. They're saying, give us inventory. We'll put it in our warehouse. It doesn't belong to Amazon. It belongs to whoever sent it to them. And if it doesn't sell, they'll send it back. They got a great model. They don't have to pay for their inventory. They don't have to finance it. They don't have to do all those expenses with inventory. But what you were just asking is saying, when they sell it, what happens? Well, what's your agreement? Consignment clothes might be 50-50. So when they sell it, they sell your jeans for 10 bucks. All of a sudden, they owe you $5 and they get to keep $5. And that's due you at the time of sale. And their policy might be, well, at the end of the month, we do our books. Great, we'll write you the check. We're not going to, this afternoon we sold it. We're not going to write you a check in 10 minutes. But we are going to give you your money because it's your money. It was your clothes, but we're going to keep some of it. And that's how they book it. So when they count inventory, they say, well, that's not our inventory. That's your inventory. Okay. So Jaden, those are your clothes, but I have them on my shelf, but I can't call that my asset. I can't call that my inventory, but it's your clothes. Does that make sense? Does that answer the question?
Yes, sir, thank you.
Cool, thank you for asking. Okay, so we're looking at this inventory stuff, and we last class we figured out the value of this stuff. We talked about $5 billion in tobacco inventory. Where to put it all, how to handle it all. Utilities, buildings, facilities, employees, moving it around, all kinds of expenses to be looked at. So this is some heavy duty tracking, not just the interest expense to finance the inventory. But what Amazon's doing is financing the inventory by you. Congratulations. It's you who's paying for Amazon's inventory because it's your inventory, not theirs. Okay. So let's go ahead. I'm going to ask you, I'm going to stop this, and I'm going to have you go into your textbook. So go ahead into Connect, and I'm going to have you take a look at, let's go to the textbook. We're going to do some exercises. So if you see here, I'm going to walk you through this financial accounting textbook. Here, we're going to go to class. We're going to go on the textbook. And in that textbook, we're going to go to chapter 5. Now be careful when you go to the table of contents in the upper left-hand corner. I'm going to have you go in and on the ebook, that's where you're going to go. If you have a hard copy of the book, you can take it out as well. And when that gets loaded, up here in this left-hand corner, we have a table of contents. We've been there before. We've done exercises and problems before. So this should be a review. When we go in, we're going to go and not to the table of contents. We're going to scroll down through chapter 1, chapter 2, 3, 4, 5. You're going to open up chapter 5. You're going to scroll down through chapter 5. And at the bottom of chapter 5, right before you get to chapter 6, you're going to see things like beyond the numbers, accounting analysis, scenario problem, problem set A, problem set B, exercise, quick study. So click on quick study. And I'm going to go ahead and divide you into 3 groups. And I'm going to have you, groups of 2 or 3. The 3 groups I'm going to have, when you go into quick study, we're going to do quick study 5-10, 5-11, and 5-12. It's all based on the same numbers in 5-10. Can you all see my screen? I've got quick study 5-10 on screen right now, and soon you will too. So what's going to happen is group 1, breakout room 1 is going to do 5-10. Breakout room 2 is going to do 5-11. Breakout room 3 is 5-12. Any questions before I put you into rooms? And you get to work together. Come off mute right away. Try to get on screen the problem. You can share your screens as well. That green button in the middle, the screen at the bottom. You can share your screen with your classmates. And there'll be 2 groups of 2, 1 group of 3. And I'm going to put you in. One question. Actually, thank you for reminding me. Yeah, please put that in a spreadsheet, preferably Excel or Google Sheets, but it's just easier to put the numbers there rather than having to rip out your calculator and do it on a word processor or tell us in class. And go ahead and do the calculations and do it on a spreadsheet. When we come back together, I'd like to see your spreadsheet. Thank you. Great question. You guys have good questions. See you shortly. Group 2 has 5-11. Yeah. You doing all right?
Yes, sir. I'm just pulling up the Excel spreadsheet.
Thank you.
Okay.
All right, are we making sense? Any questions?
Not yet.
Okay, so you guys have 5-12.
Yeah. Trying to create the spreadsheet.
Right. All right, you guys are good to go? Cool. Not gonna fight you. All right, let's go in. How are you guys doing?
Good. Just trying to calculate the weighted average
Okay,
cost. So,
all right, almost there.
I believe so. Yes, sir.
Byron, you feeling all right?
Yeah, I'm just I'm good on the FIFO and LIFO, but I gotta,
Numbers cost a little bit funky.
yeah.
Just have to take all the units and all the dollars and then take that in, then make that calculation. So everything that you bought or was in beginning inventory Gets all added together. That's how you calculate the average.
So the 11. So we just divide 510 by 45.
I got 10, 20, and 15 units. I got to calculate the total cost for each of those line items and come up with a total cost for all 45 of those units. And then I can calculate a cost per unit as an average. I can't just take an average of the 6, 12, and the 14. I've taken an average of the $60 total for the first layer. I got another 240. Each layer I have to add together to get my total cost. Does that make sense?
Yep.
It's supposed to, but we'll get back together. We'll get back on track.
Quick question. So when we were doing the other one, the practice sample that you did, you put in the $50 divided by the 30, which gave us our 1.67.
Right.
For us, the 510 divided by the 45 would give us 11.33. That is your, I'm trying to identify what that would be, because the weighted average would be $20.67 after you add 6, 12, and 14.
Okay, so you know, again, you don't want to add the 6, 12, and 14. All right, we'll start with that. The 6,
Okay.
14, you can't take an average of the, if you bought 1 unit of 6, 1 unit of 12, and 1 unit of 14, you could do that. But you didn't. You got 10 units of 6, 20 units of 12, and 15 of 14. So this is weighted. Before we did it, we bought a unit $1 and units at $2. We couldn't take an average of those two numbers and be $1.50.
Right.
If you do that, it distorts the picture. We have to get the total dollars spent for each of those layers. We've got 3 layers, the total units from each of those layers, the 45 units, and then we calculate the average cost for a single unit. And we're going to use that for all the sales. Every $20 sale is going to have the average cost of that $11 calculation that we came up with.
Okay.
So you're not taking an average of 6, 12, and 14. You're taking an average of the total cost of $60 plus the 240 plus the whatever the 15 times the 14, 210.
And just divide by the total units.
Divided by the total units, $45 per unit. That's correct.
We're good to go.
Okay. We'll be back on track. I'll pull everybody back in the room and we'll be coming together. All right. All right, welcome back. Somehow we lost one. I hate losing one or any. All right, so I'm going to have you share your screens. Go ahead and tell us what you did to calculate LIFO, FIFO, and average cost. Let's go ahead. I believe that was FIFO. Question 5-10.
Is it possible I can send it to you because my thing doesn't share the screen?
You can't share?
No, sir, because it doesn't, Zoom doesn't work on my laptop, so I have to use my phone for Zoom.
Does your partner?
I can flip the camera around if you would like me to.
Could your partner, can they show their screen?
I can, but I do not have the Excel document because I did not remember that her screen doesn't share until after.
Yep. I'll tell you what.
I can try
Jane,
and
could you
type it
email
up
to
if you'd
David?
like.
David, could you send her your email address in the breakout in the chat? And I'll go on to group number 2 and then we'll come back to you. Okay. Group number 2, take it away. You should be able to share screen. There you go. Well done. Yep, off mute.
Okay, so we had the units that were listed and the price of what they were sold at. And then at the end of it, we took the 15 units that were supposed to be sold. And since we did LIFO, the 15 units that we got on the 21st of December was what we sold.
So you were LIFO, last in, first out.
Yes, sir.
So the last layer from the 21st is what you sold. Very good.
And so that left us with 30 units left and $300 left in inventory.
Okay, so we have that much in inventory. And how would you get the amount we sold? How much did we sell? What did it cost we sold?
$210.
210. All those 15 units and 14, all of those are sold. And if you add the 210 and the 300, what do we get?
510.
510, which is the goods available for sale, right?
Yes, sir.
So it's either sold or still here. I bet you when we do FIFO, well, $510 total available for sale, but we'll have some different numbers for the inventory and cost of goods. But once you calculate one of those numbers, you know the other. And you're good to go. Okay, cool. All right, let's go on to group 3, which is 5-12. Take it away. Who's up? Jackson, Byron? Excellent. So what was the question on 12? Total perpetual inventory, like round costs. Oh, I'm sorry. Okay. How do we get weighted average?
So we got the weighted average by taking the total cost of the goods available for sale, which would have been 510, and divided it by 45, which was our total units, which gave us 11.33.
If you could right now go in and please calculate 11.33 times all units. So we've got 45 units. You do 45 times the 11. So 1133. Go ahead and calculate that out for me, please. On the spreadsheet.
Yeah, 509.85.
Yeah, you probably did not calculate it on the spreadsheet, but that's okay. So you got 509, which is rounding, 510, close enough. So again, we couldn't take our average, which was the 6 to 12 and 14 average, that we had to average the totals. So the trick with weighted averages happens to go in and take care of. So we took that weighted average, and that's how we got the 1133 per. So how do you calculate the total amount of cost of goods sold? What the question is asking us, do we want ending inventory or cost of goods sold? It's asking what the ending inventory is. So what'd you get for an ending inventory?
Would be the 509.10, right?
Well, that's everything available to sell. So we've got 45 units we can sell. And the 510 is the value of all 45 of units. But is that what we have in inventory? How many units do we have left in inventory?
510.
Well, my first question is, how many did we sell? Jackson or Byron, how many units did we sell?
I don't think we didn't sell any, did we?
Go back to the question. Go back to the question. Read 5-10 to me. Not 5-12, 5-10. Congratulations. Read it out loud, please. Fine, you're on.
sold 15 of them for $20 each.
Okay, we sold 15 of them. So how many do we have left? Go back to that picture, please. Go back to the problem. If we sold 15 of these units and we started with how many? How many were available for sale?
45.
45. So how many do we have left in inventory?
25.
Well, let's do the math. We started with how many? 45.
30.
15. That's 45 minus 15.
30.
Thank you. So we got 30 left in inventory. So we have 30 sitting on the shelf. We got 15 that went out the door. That's either here or out the door. So we multiply 30 times the 1130, is that 1133? I think it's small. To find out what is in inventory. And we take 1130 times 15 to find our cost of goods sold. And again, both of those should total to 510. So go ahead and let's figure out how much we have in inventory. What did we just say? We take that 1133 and multiply it by what?
By the 11.
1133 times 30.
1133 times 30, that's what's left in inventory, and we come up to how much?
339.90.
Congratulations. Now below that, can you add a line that says, okay, what do we sell? We sold 15 of them, valued at that same 1133. So please put the value of 15 times 1133 right below that 339. I think equals 15 star 11, and then we cell above it. Best way to put it in the formula. You get that Excel by now. Start with an equal sign. Shift 8, star, yep, and then go up to 1133. Hit return. And you should be able to say, great, I got those two numbers. One's cost of goods sold, one's inventory. Add those two numbers together. Equals up arrow plus up arrow, return. There we are, 509 or 510, it's around 509.95. So again, it's either in cost of goods sold or it's an inventory. Two choices, done deal. Does that make sense?
Mhm.
Okay, average cost gets a little tricky because you have to do that total costing stuff. All right, back to group one. Were you able to get the email and get the Excel spreadsheet? Get it taken care of?
Yes, sir. I was
like
just
that?
working on the layout a little bit, but I think
Yeah, just show and tell. Don't-
yeah, I mean, I think I don't know if I just went a little too extra with it or what, but we'll see.
Hey, you know, we could be anal, we could be accountants, we could do this. But done is better than perfect. That's the other, it's like dissertations. Done is better than perfect. Let's go for it. Let's take a look.
I'm not sure who's sharing right now, but I cannot share.
Okay, there you go.
There we go. Okay. Here we go. Spreadsheet. Okay. So we've got the events over here, which are purchases and sales. The units that were purchased, the cost of the units, the total, and then we have the units that were sold, the cost of the units, the total, and then this is like the subtotal of everything at the end.
Okay.
But I realized now that I didn't add up all like the first two purchases.
All right.
Is this
Now you were
too
LIFO or
much?
FIFO?
Huh?
You were
Oh, this is
LIFO or
this is
FIFO?
FIFO.
Okay, so you sold 5 units of the original stock, which was.
So we sold a total of 15 units, which is the entirety of the original stock, and then 5 units of the second purchase amount.
Okay, so you sold 10 units at $6, that's 6 units, and then you sold 5 of the $12 units. You got it. And then you
And
sold
then this is the total of the
15
sale
of
right
the
here.
$12 are still in
Oh,
inventory.
actually not.
So think
Oh,
you,
this is the total leftover is what it was.
gotcha. Okay, there we go.
So then the third purchase is added in to the leftover after the sale.
Okay,
And then the total of everything, which would be 30 units.
okay. All right, so we're seeing, I can see where you're getting at, trying to get it in proper format and make it easily readable. But the bottom line is, I'm going to share my screen now. If we look at what we sold, big picture, out of these units, we sold $15 worth. Yeah, we sold all 10 of those and we sold 5 of those. There's 15. And we have 15 of these left and 15 of these left. So we have 30. This is our inventory. This is our cost of goods sold. So we had to go out and calculate line item by line item, what were sold and what was, because now we had to split that December 14th stuff. Some of them are still here and some of them are sold. So we had 2 layers in inventory and 2 layers in cost of goods sold. Are we on the same page? Is this helpful at all? Does it kind of put things in sync? Helps reinforce hopefully what we're talking about. Okay, the last thing I want to touch upon, I had a question at the beginning of class about calculating inventory turnover. And with inventory turns, I'm going to go and share my screen. I'm going to look at our inventory turnover. With inventory turnover, there's one trick that you got to be aware of, and that is using the average inventory. You look at the formula, we have our cost of goods sold divided by average inventory. Because cost of goods sold is for the whole year, but inventory is a point in time. So you have to take 2 points in time and divide by 2. So beginning and ending, or officially on the balance sheet would be last year's ending, this year's ending, and divide by 2. Now, what does inventory turnover tells us? Well, you can read that. It shows how many times a company turns over its inventory during a period. Indicator of how well management is controlling the amount of inventory available. Let's take that. Let's think about it. If I have $4 million of inventory sitting on the shelf, and I had cost of goods sold of $12 million throughout the year. Now, cost of goods sold is usually a bigger number than inventory, right? Because I buy stuff, sell stuff, buy stuff, sell stuff, buy stuff, sell stuff. What is my cost of goods sold? Cost of goods sold keeps going up. Inventory goes up, down, up, down, up, down. So if I look at the picture, I'm saying, okay, I had $12 million of cost of goods sold over the year, but I had 4 million average inventory. I had 6 last year and 2 this year. That's an average of 4. So if I divide 12 by 4, I get 3 turns. 3 turns a year. That means on average, my inventory turned over 3 times. And divide by 12 months, I get, that's 12 months divided by 3 times. That's 4 turns. I'm sorry, 4 months. So every 4 months, I sell on average 100% of my inventory. What that's telling me is that good or bad? Is 3 turns are good? Is 4 turns good? Is 5 turns good? The answer is, it depends. Thank you. Next question, depends on what? Well, it depends. How were we last year? We had 5 turns last year. We turned it over faster. Now, typically faster is better. If I had 1 turn, if I had $4 million in sitting in inventory and $4 million in cost of goods sold, I'm stuck with inventory for a whole year. That's 1 turn. All right. That usually, it depends on the business. So usually faster is better, but it could be too fast. I could have a nice big cost of goods sold, a nice small inventory. I can reduce my inventory, cut it down to nothing, and I got fast turns. But if I don't have much inventory, I can't sell much. If my shelves are empty, I'm in trouble. So the whole point is, when you think about it, saying, okay, the absolute number is meaningless. But Scott, why are we calculating this? because the number compared to others in the industry, you compare Target and Walmart. You compare Walmart last year to Walmart this year. That's starting to tell a story. And the year before that, and the year before that. So these are the things you want to analyze and look at. And again, it's not the absolute number that's going to make a difference. It's going to be the comparison to other numbers that made the ratios have impact. Any questions before I set you free? Then I thank you for your time. I look forward to seeing you next class. Any questions, you know how to find me. And I look forward to being in touch. Have a good one, or two, or three.
One number, so I need that.
Okay, so the cost of goods sold was one number. And inventory is the current year and 1 year price. That's the average. That's why number 7.
Okay, because I couldn't figure it out. It's just
But thank you for asking, because I got, you got the same problem, or not yet.
Yeah.
Got it.
Because some days are like the homework, you're like, oh yeah, like this is not.
Yeah,
Other days are like, I'm sorry, what is 2 + 2?
we talked about that.
I got one time I asked you for help and I literally had the answer. I know. I love the abbreviation too, but these guys are different. I'm like, okay, hello. First in, first out. All right, let's go back to the.
It makes you think, doesn't it?
It does.
You really gotta step back and say, really? Oh, okay, yeah, I get it.
The cool thing is I'm using computer science at the same time, so I work with Excel. So when I go to look at stuff in the spreadsheets, I'm like, oh, I know how to do this. I get excited. Go ahead and do this.
Now, are the Excel videos helping you in computer science or?
They are. Yeah, and it helps me. Oh, okay. Well, that makes sense.
Good.
Yeah,
It's
like-
reinforcement. Without practice, you're lost. I mean,
Right.
if you stop using Excel for 2 years, or a year, or 6 months, but a summer.
Yeah, which I'm gonna have to use Excel like every day of my life. Because I'm HR management, so part of the compensation is working with Excel.
Too very nice to do it, John. Too bad that's one thing.
Say it again?
You want to career fair? Washington career fair?
Yes, sir.
Oh, you are.
Plenty of yes, sir.
Is that Thursday?
Yes, sir. Thursday at, oh gosh.
From noon to 5 or something?
Yeah, something like that. I cannot, I'm not.
It's on the calendar.
Yes.
I say Calendly knows my schedule better than I do. So good. Yeah, when you're available, check my schedule. I don't know. I look at it in the morning and I look at night before. I say, okay, I think I have some time tomorrow.
I guess I am free. I didn't think I was. Yeah, no, it's very helpful. Thank you.
Well,
Have a good night.